Here are the stats I'll go over in this June 2023 Orlando real estate market update. The summer selling season has started. Will we see a repeat of last year? Let's find out. The months of inventory has gone down from April to May, and a couple notes. So, all the information that we'll be getting is from last month. So, all the numbers I'm pulling is from May because everything needs to be tabulated. So, that's why you're seeing May, even though it's a June update. And then months of inventory, if you're not familiar with what that is it's basically a way to measure how many homes are on the market. So a balanced market is considered to be 6 months of inventory. So what that means is that in 6 months, if no other homes came on the market, then all homes would be sold. So in this case, 1.63 months, if no new homes came on the market, then everything would be sold within, a month and a half. So this indicates that we're very much still in a seller's market because, again, a more balanced market would be 6 months. We haven't had hit 6 months in a very long time, but it is better than what it was a year ago, being under a month. So a little bit of an improvement, but still very much a seller's market. I'm guessing for this next quarter coming up that we're probably going to have about the same amount of inventory. It might go a little bit lower in June and maybe in July, and then it'll probably start to catch up in August. And then as we get through the holiday months, maybe the inventory, will get a little bit more. I don't see us going past 3 months of inventory. I think we'll be lucky if we get to like 2.5. For the median home price, there was an $8,000 increase from April to May, but year over year, it's a negative zero point 0.5 change. So right now in May, it was 378,000, and then in May 2022, the median home price was just under 380,000. This is probably indicating some market stabilization. We'll probably see prices go up and down month over month. That's just kind of how it goes. But looking year over year, I think it'll even out. Now, I also could see a scenario where the inventory starts to tighten up through the rest of the year. If interest rates drop a little, more buyers could enter the market, pushing up prices. The average days on market went down 7 days, and I think for this time of year that makes sense. We're going to see the average days on market go less and less. Probably we'll see that in May and June, June and July, and then as we get into August, September, maybe the average days on market will start to creep up again. We saw the interest rate come up a little bit in May compared to April. Now, there is a little bit of good news that happened recently. The Federal Reserve paused interest hikes this month. And so the Fed indicated that they don't see the rates going down this year, which isn't good news, but the fact that the rates didn't go up, that is good news. However, interest rates could go up later this year to continue to combat inflation. But I think what all this basically means is we're probably going to just be hanging out from 6 to 7% the rest of the year, and probably into next year as well. I know earlier in the year and late last year, there was some people who were predicting that the interest rates would get down to like 5.4% or something like that this year. I don't see that happening. So people who are encouraging you to do like the 2-1 buy down rates and all that stuff, saying that, hey, in a year, rates are going to be down, so it's no big deal. Lock in, this rate now, and you'll get a better one in the next year or two. I don't know if we can really depend on that happening. So right now, I would just be in the mindset of we're probably going to be around that 6 to 7% range for at least the rest of the year. Now, of course, anything could change if there's an economic collapse, anything like that. Then who knows what the interest rates might be. Are you thinking of moving this summer? Let us know in the comments. If we haven't met yet, I'm Ginader. I'm a real estate agent in Orlando. If you have any real estate questions or you need a real estate agent, my contact information is in the description below, or use the link in the description to add an appointment on my calendar. There's also a link for my preferred properties that are currently for sale in the Metro Orlando area. This state of the market quote comes from the Orlando Regional Realtor Association president, and she said, "As we approach midway through the year, prices continue to rise and homes spend fewer days on the market. The market cooled near the end of last year, but we've been on an upward trajectory ever since. Many families prefer to save their moves for summer when the kids are out of school, so we will likely be in for a busy selling season these next few months." And all that makes sense to me. I think the key statistic to watch is the interest rates. Since the Federal Reserve paused rate hikes, this could mean more buyers come to the market, and as I mentioned before, this could make the housing prices go up, especially in the summertime when it's a busy time for real estate and for people to move. So for the coming month, I think buyers can expect an increased competition than earlier in the year. You'll probably see some bidding wars, stuff like that. I recommend finding homes that have been on the market for over 14 days. Maybe those sellers will be willing to negotiate. You really never know. Sometimes people are just putting their home on the market just to see if it'll sell, and they'll, put the price really high and they're not really there to negotiate. But some people, they kind of mismanage what they're thinking, and they kind of put the price higher than maybe it should have been. They realize that they're not getting any offers, they're not getting any showings, and then they're like, okay, maybe, well, it's time to negotiate a little bit. I think another strategy for buyers is buying new construction. That could be a really good idea for some people. Some builders are offering lower interest rates, not as good as before. Like, I think that a year ago they were offering like 4.5% lock in. Now I'm seeing closer to like the high fives, which isn't the best. But when you consider that you are getting a new home, in theory, there's not going to be a bunch of stuff that you're going to have to do within the next few years to update it or, fix anything. So getting an interest rate in the high fives isn't terrible, and it could be a motivator for some people. For sellers for the next coming month, I think if your home is priced appropriately, you probably are going to get multiple offers, maybe over list price, maybe not, probably within the first week or so of being on the market. Now, one thing to consider is the buyer pool is smaller than years past. So you may have to negotiate and fix some things around the home. 2 years ago, buyers were just buying anything. It didn't matter price, condition. It was selling. Buyers, they're not buying just anything anymore. And then another thing to be mindful of is the age of the roof. I talked about it last month, but basically, as long as your roof is under 10 years old, you should probably not have a problem. If it's above that, there could be some issues with the new buyer obtaining homeowners insurance. For videos about the Orlando real estate market, check out this playlist or this Orlando neighborhood tour playlist. Reach out to me if you have any questions or you need an agent. My contact information is in the description below. I appreciate you watching all the way through, especially if you're a subscriber. Thanks for watching.